How you doing today, Discover Your Options students? You're with Coach Jay Johnson today, and we're going to go over why an option. I get a lot of questions on should I run an option or should I buy a stock? So this page here is from the guide that you all, if you haven't received it, will receive. That's a part of the 8-week boot camp course. And it just breaks down the advantages of buying an option versus buying a stock to help you get a better idea what you think is best for you. So over to the left where you got the thinking man scratching his head, we have a couple of little bullet points. So let's start reading there. Why and when should you consider an option versus just buying stock in a company outright? Common question we get. The best way to demonstrate this is by looking at a side-by-side comparison of each possible outcome. So that's what we did. We have two boxes here, a blue box and a gray box. The blue box is labeled buying stocks and the gray box is labeled buying an option. And we have a side-by-side comparison so we can kind of see for ourselves or for yourself which one you think is best for you. Here you'll see a real-life example of a stock that we reviewed, vetted, and ultimately ran. That company was MTN, Mountain Resorts. Those familiar with the Denver, Colorado area or the Colorado area, you know MTN is Vail Resorts. So we ran the numbers from the dates to their actual prices compared to those dates on buying the stock versus an option. So let's go to the blue box and look at buying the stocks. So on February 22nd, 2017, one share of MTN stock traded for $181.60. The cost of buying 100 shares of MTN stock on February 22nd, 2017 would be $18,160. Again, we know that one option contract equals 100 shares. So to do a fair comparison, we had to do this with 100 shares and see what that price would be. We projected that MTN stock would see a 12% increase by July 2017. I believe that's 6 months out. The Discover Your Options system came up with a projected number of 12% increase. So that number ended up at like I want to say like 203 or something. I don't have my calculator with me, but on May 9th or May 8th, 2017, one share of Mountain stock traded for $199.82. That was an increase of roughly, what is that? $17 and some change in little less than 3 months, like 2.5, like 2 months and some weeks. So if on May 8th you sold those 100 shares that you acquired back in February, this would be your gross. So you would take the $199.82, which is what the MTN stock appreciated to on May 8th, times 100. So that's $19,982. Total net profit of $1,822. That's not bad at all, guys. Not $1,822 in like 2 months is not bad at all. Your percent return on original $18,000 investment was 10%. Again, not bad. That's a 10% return in like 2.5 months. You know, some of your top hedge firms, they're not giving you that in a full year. In your bank, you'll never see that in a year. Your bank is like 1% annually. So 10% is not bad. Let's go over to the gray box, the buying an option. So on the same day, February 22nd, 2017, one share of Mountain stock traded for $181.60. Again, we projected that MTN stock would see an increase of 12% by July 2017. So that that's what I had said earlier. That 12% increase equals out to $203.55. The premium for one call contract, which equals 100 shares of MTN stock with a strike price of 195. Now let me stop right there real quick. We chose the 195 because, as you know in the previous video, that you could go to an option chain and they may not have a 203. Matter of fact, I know they won't probably have a 203, and they might not have a 200. They might only offer a 195, a 205, so you kind of got to see what strike price is available compared to the premium that you can afford. Now, 195 was actually lower than the 12% increase that we predicted. So that was fine with us. And we paid $4.09 per share. Again, we know that one option contract equals 100 shares. So that cost us $409. So on that same day, May 8th, 2017, one share of Mountain rose to $199.82. On May 8th, that premium for the July 2017 strike price of $195 was now $6.64 per share. That means the same contract was now worth $664. So if on May 8th you sold your option call contract, you would have a net profit of $255 with a return on investment of 62%, guys. That is amazing. So you might be thinking like, well, the 1800 sounds way better than 255. Yes, but you had to invest $18,000 to get that $1,800 versus we only invested $400 with the option and came away with 255 with a ROI of 62% versus that high capital investment of buying the stock and hoping that it appreciates, because that's the only way you can make money when you purchase in a stock is if it appreciates, if the stock price goes up. If you're buying and holding stocks and the stock price goes down, there's no other option. You just got to wait it out because you're losing money. Or if that stock price is just remaining dormant, you have no other option because it's not making any money. So you hoping that it appreciates. So that's a high risk of investment, $18,000. The hope that it can only make money one of three possible ways, and that's if it appreciates. And then you had a high capital investment and your return was only 10% versus with the option, we can make money if the stock goes up, if the stock goes down, and then there are strategies where you can make money if the stock remains the same. So you're making money 3 out of 3 possible ways when you buy an option. And then your capital investment is way cheaper. For 100 shares to control 100 shares of MTN, the stock costs $18,000, guys. Versus buying the option, you can control that same 100 shares for $409. And then ultimately, we had a higher return on our investment. We had a 62% return. So those are the numbers. The math don't lie. You decide for yourself which option is best for you. We thumbs up the B light bulb, the gray box, because for us it was simple, cheaper investment, higher return on investment. Made sense to us. So back over here to the left, there's a caption down here in red text down here. Let me read that real quick. That says, bottom line, for a significantly smaller upfront investment, The option returns significantly higher returns. Options may be a great plan B if you have less cash to invest up front. That's what we were saying, that you don't have to be a thousandaire to get into options. All you have to do is just continue to flip your return. If you want to get into buying stocks, buying and holding stocks to really make any type of significantly relevant difference, you got to come with like $20,000. You got to come with some money. But for those that are trying to get in and don't have that type of capital laying around, options may be your options, guys. So that's what it is right there. I hope this explained everything well for you. I hope it gives you a better insight on what's best for you, which option is best for you. If you guys have any questions, please reach out to one of the coaches. I'll talk to you guys in the next video.